Hey guys, Matt here. Welcome back to this week's portfolio update. I like to show my portfolio once a week, once every other week, something like that, as I think that sets me apart from a lot of the other stock YouTubers out there, and that I show my receipts. And you can see as far as the year to date, just as far this on the front page, yeah, I'm not doing so well. I mean, I'm not doing terribly, but I'm also not doing very well either. This, if you take a look at the portfolio itself, yeah, I mean, we are down. Like we've been getting destroyed like all week. Like I don't think there was a breath of fresh air this week. ATT did bring in some gains earlier, uh, with a really strong earnings, but I mean, Friday sort of took most of those stock gains away. Now we are going to talk about Facebook, Meta, whatever. We're going to talk about that in a second, but first let's go over some of the other positions. And the first thing I want to bring up is that I put about $1,000, 1,000 extra bucks into my portfolio. So what I like to do is towards the end of every month, at the end of every month, I put $1,500 into my portfolio. And then if I have cash left over, I put that money into it. And that's what you see right here. We got ARK down about 45%. Yeah, I may need to do a video on ARK. As soon as I get my notes together, we're going to talk about ARK in a few videos. But Jivo's inching his way back down and dropped below the $4 range. Now, I make a lot of videos on Jivo. You know I'm bullish on them in the long term, but right now, like they're one of those stocks that's not making really any money on the top line or the bottom line, so they're going to keep suffering. And Palantir is back below $12 again because it's Palantir. I mean, it's making a lot of money. It's making some on a top and bottom line. It will be profitable next year, but the market doesn't care, does it? And then Verizon's down. I mean, Verizon didn't really have a good quarter either. Walgreens is back down. Intel is inching its way back down. Like, nothing's good. Even Bank of America, a stock that I thought would be up with the whole, Fed raising interest rates announcements and stuff. No. Bank of America is down as well. So, yeah, nothing great at all to report. Now, one thing I want to bring up before I talk about Meta is that I got some really probably good advice from a certain point of view earlier this week, last week, and that I should sell these stocks and go into ETFs, like or energy ETFs to be precise. And on face value, that makes sense, right? Because let's take Duke Energy stock for example. Like that is trading very close to all-time highs. Chevron stock is trading fairly close to all-time highs. Like energy stocks are doing very, very well, as are oil stocks. That is very, very true. But two things. One, I mean, investing in it now. I mean, the stocks have already made their gains. The oil ETFs have already made their gains. I mean, you don't invest in a stock after those gains are made. That's not a smart move in my book. But the idea of rotating from one sector to another and all that stuff based on macroeconomic trends, that's a pretty, I think that's a pretty short-term strategy. And that makes sense for the short term, but I'm not a short-term investor. Like, I watch a lot of Humble Trader, and she came out and said that investing short-term, like day trading and swing trading, like that has to be run from a business. You have to, that requires a lot of attention to, that requires a lot of your attention, and that's not attention that I'm willing to give. I have a day job. That is more effort that I'm willing to give. And so my style of trading, or my style of investing, is long-term investing. When I'm buying these companies, I'm not buying for 6 months gains. I'm not buying for 1 year gains. I'm buying for the next 3 to 5 years minimum. At least that's my plan. Now things may change, but I'm buying with the intention of holding for at least 3 to 5 years. And in some cases, 10 years. So for the market to have a downturn, based on, the things that are going on, the war that's going on, the inflation, supply restrictions, that's all well and good. And that presents nothing but a buying opportunity. Now, it's been one hell of a buying opportunity that's been going for at least a year and doesn't seem like stopping. But yeah, all this is nothing but buying opportunities for me. Speaking of buying opportunities, Facebook, Meta, whatever, they have earnings coming out Wednesday. So let's start with the price as of right now. Facebook is down 45.6% year to date. Facebook had a very terrible last quarter, which we're going to talk about. And the outlook for this quarter doesn't look so hot as well. It starts here. Now, you can see the revenue jump up, and that is fantastic. Revenue go up, that is good. However, if you take a look at the income from operations, you will see that Netflix, well, Netflix went down as well, but Facebook actually dropped from last year. And that is because, I mean, the cost of revenue is going up. Like, everything is costing more money. I don't think that is a surprise to anyone watching this. I mean, supply chain costs, research and development costs, the cost for marketing is going up. So, in addition to everything costing more, from marketing to general and administrative. Now, this is the CFO Outlook commentary from the same article that I want to remind you came out in February. They expect increase and continued headwinds from increased competition for people's time. They're talking about from TikTok and Google. They're talking about they're lapping a period in which Apple's iOS changes were not in effect. So Apple made some iOS changes which negatively impacted Facebook's middle line and top line and stuff like that. That's in effect now, and I'm pretty sure that's continuing to eat away at it. But the thing I want to talk about here is that second, we will lap a period of strong demand in the prior year, and we're hearing from advertisers that macroeconomic challenges like cost inflation and supply chain disruptions are impacting advertisers' budgets. This was as of February. I am getting the feeling that with the war going on that started since then, and with Meta no longer operating in Russia, I'm getting a feeling, and then, of course, not only that, but the Fed rate increases and all that stuff, I'm starting to get a feeling that this is a lot worse now than in February. Now, I don't work in business. Maybe I don't know. Maybe Facebook has found a way to step around it. Maybe that's true, but I have a feeling this is a lot worse than it was in February. So, yeah, I do not have a strong, warm, fuzzy feeling about Facebook's earnings coming out Wednesday. And stuff like this, stuff like inflation, supply chain disruptions, advertiser budgets of other businesses, that is not something Meta can control. So if all this is worse, yeah, Facebook's top and middle line are going to be impacted. Right now, we have analysts averaging 2.56 EPS for the quarter, and we have analysts estimated $28.23 billion in revenue. That represents just below 20% year-over-year sales growth. Now, we'll see if Facebook hits this with the whole, no longer doing business in Russia and the whole, advertiser budget shrinking. We'll see if Facebook meets this or doesn't meet this. So if Facebook shows any kind of weakness in this earnings, yeah, it could drop 30% more, just like Netflix did. That is entirely within the realm of possibility. So what am I doing? Well, I'm going to do what I've been doing. I'm going to keep investing. Right now, Facebook, Meta, whatever, as of yesterday, was trading at a 4 PE. Is trading at a 4 PE of under 15. From a value standpoint, that is phenomenal. From a PG ratio standpoint, that is pretty good, actually. That is pretty good. So, earlier this week, last week, I put $400. And this is before the earnings. That's my strategy, is anytime Facebook is under $200, I put money into it. And I will keep putting money into it. And if Facebook drops 30% or more after earnings next week, or this coming week, I'm going to keep doing the same. Because guess what? All of these problems here are short-term. Now, short-term might mean for the next 6 months. Short-term might be for the next year. But, I mean, this won't be for forever. Now, maybe Apple's iOS changes may be in effect for a while. Maybe that's a more permanent thing, but supply chain, inflation, advertiser budgets, all that will reach some kind of equilibrium sometime. And once that happens, like, growth stocks are going to make a comeback. That's why I'm not selling Facebook. That's why I'm buying more. And that's why I will continue to buy stocks like Facebook and ARK and other growth stocks. Because I'm a long-term investor, and that is a long-term strategy. But anyways, take care, have a great day, and eat your vegetables.